Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the daily chart for the Dow Jones, and as you can see here, just pointing out quite simply that it's met a trend line resistance there, but we expect it to move higher, and it's also past the 61.8 retracement level as well from this previous high here, which does give it a more of a bullish consensus as well. That's the 61.8 there. Sure, it can pull back into the 78 here, and there is supply here as well. So yes, it will struggle, in this block here as well. You can see from here, you can pretty much square that next block of supply up there, but I feel that will chip away at that. A long-term S&P count is pretty much on track. The only sort of change that we've had here with the S&P 500 is that we were looking for a larger sort of wave 2 pullback from here. So we were looking for this being the A wave, a B wave up here, and a C wave back down here for wave 2, so to speak, and then the move up through there. But it's pretty much likely that we need to bring the wave 2 over to here for this smaller ABC here, which actually makes the market a lot stronger as well. So as you know, looking at the daily chart or the 4-hour chart, we're looking for highs, up above the 1500 there. So still a fair way to go up on all of that. So that's that. The European markets, the FTSE here, I haven't put a wave count on this here, but as I pointed out before, this structure coming through here is a creeping aspect, and it's a sign of weakness, and it hasn't moved up as much as the DAX or the other markets have. So this is the DAX here, which is moving much nicer and cleaner, as you can see as well, and pretty much it's a little up for wave 1 here, back for wave 2 here, little wave 3 up through here. So we should see some sort of move up into group 1 here above the 7600, and some type of correction across here. It could be the correction weight maybe above the 76 here, or below it, or evenly spread across here. You don't know until it really gets out, until it really sort of unfolds. In terms of trading safe, you'd trade to a level, a number, the next largest number, allow the correction. This is normally top of the third wave, so we should see some little push here, but normally just to allow the correction to unfold, and then look to reposition yourself in that. And the more that you understand the correction, well, of course, the better price you can enter the market. But as I say, to keep things simple, is just waiting for support on the closest largest number, and then using group 1 to scale into. But if you understand the correction, there's no problems getting in, lower on the pullback if you understand what's going on there. The Australian market itself, or the ASX CFD here, well, it's going pretty much according to plan here. A little fifth wave here can be at the 4600 here, which is our target. But I do see that, and you could see as well, that the move up through here, as you can see, is extending, isn't it? Everything's sort of the trends are getting a little larger. So that's a really positive sign. So we should see some type of correction across the 4600 here before we see any upside, further upside there. But expect some type of correction here, a move up through here, and then a larger correction across the 4600. But of course, this is going to be a part of what's going to be happening with the solution to the fiscal cliff, and so yeah, it's a bit of a guessing game there, but at least they are talking. But what are they talking about is another point. But the market's ever hopeful and ever optimistic. Alrighty, let's have a look at the commodities as they are steady, and slightly copper's coming off a high a little bit as well. So let's have a closer look at that. Okay, starting with copper here. As you know, we're looking for a little third wave, fourth wave, and a little fifth wave up to this area through here, and that's come about now. So it appears, well, that the market's correcting again. So we should be able to see the price pretty much come down to the fourth wave of one lesser degree. So the price can come down to the 362, which obviously will have some sort of impact on the materials sector in the days ahead. That said, with the fiscal cliff situation, the stocks may not sort of bow down to the commodity prices as much, but it's something that we need to be mindful of there. So this we consider this a top of at least a couple of different degrees. So yeah, I would only be concerned if the 365 here became the retested resistance. That means it's dropped out of Group 2 and it's failed to maintain a presence in the Group 2 zone there. So retested resistance at the 365 would be a larger correction opening up at that point there. So that's something to watch. The oil price, pretty much on track for what we expected, just a slight sort of variation in the wave count now, but looking for considering this wave 3 down to this point here and looking for a wave 4 back up to the 86.50 area through here, then a move back down into this area here as well. So a little bit of jigging through here. As you can see, it's pretty much bouncing but edging lower, and that's what we can expect. But another retest back up here for a move down through here. So not an easy trade as such, and you need to be careful there. Better off moving in closer and trading the sub levels within all of that. Just want to go to the silver market here first, because it's a little bit sort of easier to sort of see. This move up through here does appear to be corrective in terms of an A and a B and a C for the A wave, a B wave here, and then a C wave through to here. So it's quite neat and tidy in that sense. So we should see new lows being made in here, and as I mentioned the other day in text in the report, that we're looking for a break lower, but also looking for a retest of 33 there, which would be a retest on lower volume, would be a trade set up to go short. But if that doesn't occur and the market moves down, then you need to be working with subgroup 2 here, and the important level in subgroup 2, as you know, would be the 32.72. You would want that as retested resistance, and then you would look to short at that point, adding at the 32.65, and further down you can even use the 32.60 and the 50 as well, but they will be bouncing at these old lows here as such. Now, taking this into the gold market area pattern, it's kind of the same pattern as well through here. With this here, we've got this labeled as a wave 2 on our charts. But I always like to keep, in the morning report, explore possibilities, and I'm very much into, I like Elliott, enjoy it, and it's terrific. But at the same time, I've learned that there is weak spots in it, and at the end of the day, you'll also need to trade what you see. And what we see here in this little particular pattern through here, we can see that the market is in 3 waves down in this way here. So we've got this sort of corrective pattern as it stands at the moment, and that could even come down here a little bit further, and it doesn't really matter for what I'm about to say, because if we end up with 3 waves here and then the price market finds support on the 1710 here, then we can go long from that point there. So support on the 1710 is a long trade setup for 2 reasons. Is that the market's in this direction, you've got a 3-wave counter trend, and then you're on support the closest largest number. So there's a lot of evidence there to suggest higher ground. So I would go with that. If the, say, halfway between 1700 and 1710 here, the 1705, if that became the retested resistance, well, then you can look to short there. But you would only glean a very small position, because you're facing the closest largest number, which would be the 1700 here, and you really want to be under that as a retested resistance before shorting there, with the possibility of taking out these lows through here. It's a little bit difficult for this to move down, especially when the US dollar index is also moving down as well. So we'll get to see that now. Actually, let's have a look at Forex. Okay, just starting with the US dollar and just starting in the bigger picture, the daily chart here. And as you know, we've got this A, B, C correction here for a B wave, and we're looking for a five-way structure to the downside. And we've got wave one to the downside, and we're looking for wave two. And for wave two, we were looking for this in an ABC, which is a three-wave structure, a 5-3-5 structure, and then a move to the downside. Now, when this third wave starts down through here, then the US stock market and other opposite currency pairs will be moving to the upside quite strongly. So it does present a really good trade. So it's figuring out what happens in wave two here. That's the important thing. So if we just drill down into that for a moment. So our first assumption is that that we've found the low here, so we were looking for an A wave to move back. So we've got our A wave in place. We've got our B wave in place now, which is, it may still have further to come down actually. We'll have a look at that in a moment. It normally pulls back 61.8% of the wave A, but working around large numbers, it can certainly skew price patterns and so forth. So anyway, what we're looking for here now is we're looking for a wave C here as such. So we can move that out the way there and remove that, and then that down through here. So that's kind of what we're looking at. A B wave is in three waves, so we do have three waves there. The third wave here, which would be wave C, that should be in five waves. So I still think there's a little bit more to go in that. And then the wave C up here, wave C is always in five waves, so we should see five waves in wave C up through here. And there's normally some sort of equality between wave A and wave C. Now, they may be equal, or they may be 61.8%, but there's normally quite a strong relationship there between the two of them. Wave A is normally quite sharp in markets, and this can be to the downside as well, and wave C is normally sort of a bit lazier. So look, just drilling into this situation here, and also what I want to point out as well is that even though we've counted this up here in five waves up through here, it's still possible that the whole ABC could be wrapped up in through here. So it will be interesting to see how this develops down through here. So I'll just repeat that. This A, B, and C here may already be in this structure here already. So we need to be just aware of that a little bit, but we'll see how this develops further down here. But we should expect some support to come in here. I am rambling on about this because it does affect stock as well, just not the currency traders. So at this stage, this is what it sort of looks like through here. So for the B wave down through to here, we've got the A, the B, and we're looking for the C wave to come down. And it does appear that we've got like wave one coming into here, wave two coming into here in one way or another, and a wave three, so we'll see a wave four and a wave five into here for the B wave. So it can drop down into the supply level over here, but at the same time, and firstly, we need to expect some sort of support around this sort of area here. So as you can see, it will take a session or two to work through that, and the Dow Jones will be working through the 3,300, the S&P 500 at 1430, which is an important number because the top of Group 1, and the ASX at 4,600. So we could see a sharp reversal from, once either from here or here, back up into the C wave here, and if that's the case, then we're going to see a change in direction for a short time there, and that's why when I talked about the S&P 500 before about the wave two there pulling back, we sort of changed that, but we may have to go back to that as well. So we'll just sort of see. We're kind of at those sort of edges there. We know we're on the right track. It's just a matter of are we going to get one more swing before we move off. So the flip side, the euro here, also just in the larger picture here, not to worry too much about the wave count as such for the moment, but what I wanted to point out is that, there's a couple of things here, is that we are at 130, which is important because it's the top of minor group 1. So support here pretty much flips the target to 150, which is a medium level. I know that's a long way away, but you know, that's just how it works when using the levels, and they work quite well. So the second thing here is that this particular pattern through here is a corrective pattern. It's in 3 waves. So that means that we should see further, you know, higher ground coming into play. So that's good. So the next move is that we do have this impulse wave structure coming up through here. But what we're a little bit unsure about is the little corrective pattern that's going to occur in here in terms of an A wave coming down to here, a B wave back up to here, and a C wave coming back down to here, and then finding support here. But what we're looking for at the end of the day is support on the 130 there, and we do as above, so below in this case. So we've got an equal swing across the 130 at this stage, and you know, so we can expect this to have some more swings across here, but eventually it will work into that 130 price point and find that as support, and that's what we're looking for. So if we sort of glean in there a little bit further here, and not to worry too much about this wave count or the other wave count, but really sort of staying with the levels a little bit here. So as mentioned, we've got that equal swing across the 130 here, and we've got this move coming back up. And yes, sure, we may get some sort of head and shoulders sort of thing here, as it was here. We could get that here for the C wave through to here, or the B wave can move up further through here and then swing back down lower as going to this trend line, or maybe not, but just pointing out that we've got this move up through here. Yes, it can go further up through here. Yes, it can come back down through here. How far it comes back down is a little bit unknown, but what we're looking for and where the good trade will come in, the solid, safe, longer term trade, will come in once this completes its sort of vibration across this number in time and price, and find support on there, and then moving up from that point there. So it does leave some opportunities to take in terms of buying further any new lows that come into this area through here, and also adding through this area through here as well. But just drilling closer into this little area here, if it doesn't fail at the 130, then the next supply area is this block up here, and finding support on top of group 1 here, on top of 10, 20 and 30 here. So just drilling into that a little bit further through here. You know, it's likely, and normally the normal thing is that once it reaches a level here, it will normally stay within group 1. So group 1 above and group 2 below will become the trading range for this, and they're not very good areas to trade in, really. So you're far better off trading to a number, getting out and allowing the range of it, and allowing it to swing within that. Sure, if you're scalping, that's something else. And you know, if it just goes straight up through here, it's not that you're going to miss anything, because you may want to glean a position on the 20. Definitely, if there's support on the 30, you definitely go from that point. So you're not going to miss any upside, so to speak. You just need to be careful in here. And I was just wondering, has anybody done any research on the volatility hours of the euro or the Australian dollar? So you know, exactly what times are the highest volatility within these markets? If anybody's got that information, can they send it through for us, please, so we can share it with other members? Alrighty, the Australian dollar is chuffing along quite nicely, and it's great to see it move through the 105. You know, that means a lot to me, and what we need to be looking for now is you know, it will push up, and you know, it likely run out of steam and come back and test that 105 as well. So at the moment, you know, we see that it's, you know, it was resistance, but it was persistent, and it's broken through, and you know, normally break through with a fair bit of gusto, then runs out of steam and comes back and settles and finds itself. So that's the process. So we're really looking for the first high above the level here, and we'll see that come back and correct itself there. But in saying that, I can see that this whole area here is a bit of a loaded spring, and it's very sort of, very strong in its own way as well. So there's no real need for it to have a correction back through here. So it is a positive aspect as well. And I know the newspapers say different, but with the China $460 odd billion going into the new year with their stimulus, it's really going to see bond buying going here. I know bond buying's probably the lowest it's been for Australia in the last month or so, but I still think that it's there. So. But all I'm looking for in the bigger picture is support on the 105 here, and just being above the 105 certainly brings the Australian dollar into a positive market as such. But we knew that it was positive once it had support above the 104 here, because unusually the 104 in this case was a bit of a balance line through the Australian dollar, so, and also from the 103 as well, because if it's at the support on the 103 gets us to the 105, just like we're talking with the euro there. I know it's a long way away, but support on 130 creates the next level, which is the 1.5. So nothing too high, nothing too low when it comes to the markets. Alrighty, forgot a smaller picture on this here. I haven't worked all this out through here, but support on the 105.30 would see higher ground. So that's what you'd be looking for. This is the arrival. This is the reaction. You'd be looking for the first high above the level, and then you'll be looking at some sort of ABC correction through here, and then support on there. So there's the classic trading levels pattern. So there's a fair way to go just yet, so no need to rush in that. Failing to find support on the 105.30 would see the price back at 105. Alrighty, good morning, good luck, and enjoy the day ahead.